Out of every 100 traders who attempt a prop firm challenge, only 7 ever see a single payout. Not 7 who pass. Not 7 who get funded. 7 who actually receive real money in their bank account. And yet, the prop firm industry is worth $20 billion and growing. So the question you should be asking is, who is actually making that money? Welcome to Trading Mind HQ. Today, we're going to talk about the harsh truth about prop firms, the part nobody in this industry wants you to know. Let's start with the raw numbers, because they tell the whole story. Across the industry, only 5 to 10% of traders pass a prop firm challenge on their first attempt. That means 90 to 95% of people who pay for a challenge fail it. Now, of those who do pass and get a funded account, only about 45% of them ever receive even one payout before breaching their drawdown rules. When you combine both numbers, the pass rate and the payout rate, you get to that brutal figure. Just 7% of all traders who start a challenge ever get paid. Ever. And here's the number that really puts it into perspective. On average, traders spend around $4,270 on challenge fees before they reach profitability. That's not one challenge. That's multiple attempts, multiple failures, multiple payments. Now ask yourself, where does that money go? It goes to the prop firm. Every failed challenge is pure profit for them. No market risk, no capital deployed, just a fee collected and a trader disqualified. Prop firms are not rooting for you. Their business model runs on your failure. Now here's the part that most traders find out too late, and it changes everything about how you should think about prop firms. When you pass a challenge and get a so-called funded account, you are not trading real money. Read that again. You are not trading real money. In almost every retail prop firm, your funded account is a simulated account, a demo account with a higher balance. Your trades are never executed in the real market. No order you place ever touches a live exchange or an actual liquidity provider. The prop firm is simply tracking your performance on a simulated balance and paying you a percentage of your simulated profits, out of their own pocket, or more accurately, out of the pool of money collected from all the traders who failed their challenges before you. This is why prop firms can offer you a $200,000 account for a few $100s in fees, because they never actually give you $200,000. It's a number on a screen. This isn't necessarily fraud. It's a business model. But it is something every trader needs to understand before they spend a single euro on a challenge. The funded account is real in that the payouts are real, as long as the firm stays solvent. Which brings us to the next problem. Between 2023 and 2024, an estimated 80 to 100 prop firms shut down or exited the market entirely. Traders with funded accounts and pending payouts lost everything overnight. No real capital, no real trading, no payout. Just a closed website and a support ticket that nobody ever answers. So, should you never touch a prop firm? Absolutely not. And here's why. For a genuinely profitable trader, a trader with a proven edge, real risk management, and the discipline to follow rules, a reputable prop firm is one of the greatest tools available in this industry. Think about it. If you have a strategy that consistently returns 5% per month, the difference between trading a $5,000 personal account and a $200,000 funded account is enormous. Same skill, same strategy, 10 times the capital, 10 times the income. And you risked nothing but a challenge fee to access that capital. That's an extraordinary leverage of skill over capital, and it's completely legitimate when you're working with the right firm. The top reputable firms, FTMO, Funded Next, Apex Trader Funding, Funding Pips, have paid out hundreds of millions of dollars to traders. These are real payouts, verified, consistent, and on time. Apex alone has distributed over $598 million in payouts since 2022. One trader received a verified single-day payout of over $2.5 million in April 2025. So prop firms are not a scam, but the industry has bad actors, and as a trader, you need to be able to tell the difference. Here's what separates a trustworthy prop firm from one that will take your money and disappear. First, transparent payout history. A legitimate firm publishes verified payouts, trader testimonials, and withdrawal proof. If you can't find independent evidence of consistent payouts, walk away. Second, clear, consistent rules. Rule changes mid-challenge or retroactive policy updates are a massive red flag. Legitimate firms publish their rules publicly and don't change them on traders who are already funded. Third, how long have they been operating? The firms that survived the 2023 and 2024 industry shakeout did so because they were financially stable and well-run. Longevity matters. Fourth, profit split and payout speed. Top firms now offer 80 to 90% profit splits with on-demand or bi-weekly payouts. If a firm is offering unusually high splits with very low fees, ask yourself how they sustain that model. The prop firm industry is not the enemy. Failed prop firms, bad actors, and traders who don't understand what they're signing up for. Those are the problems. If you trade with discipline, manage your risk properly, and choose the right firm. A funded account is one of the most powerful tools a retail trader can access. At Trading Mind HQ, we're going to break down everything: strategies, firms, psychology, and the market mechanics that move forex, indices, and metals every single day. If this video gave you something real, hit subscribe. New videos every week. No hype, no noise, just education that actually moves the needle. See you in the next one.